Ladies and gentlemen of the crypto space, we're live on a Wednesday, March 19th at 11:31 a.m. Title of the stream today is You Made It This Far. What does that possibly mean? What is this lunatic talking about? We just had our bull cycle in 2024 that the top is in. We are going into recession. It's all over. So this lunatic says everyone not other than myself, has a different opinion. That's clearly the case. I believe something, whereas other people believe something else. So I tell you the story of what I believe. I believe 2024 was not definable as a bull market. I believe that there were two isolated events of confined outperformance to two particular sectors. Obviously, the beginning of the year, we had our Cosmos experience, Cosmos hubs, and the airdrop season. And during the summer, we had Solana and pumped out fun exuberance. And throughout the entirety of 2024, the biggest takeaway, the backdrop, is the significant mean regression in stablecoin supply, mean regression to the upside. And we've had complete follow through this entire time. Stablecoins are up and to the right. So there was no bull market. It has all been a bear market. This red circle is a bear market. So how do we incorporate or reconcile with the two periods of outperformance that we are all aware of in 2024? Isolated rotation of capital, concentration of capital, um, isolated and short-lived narratives, very short-lived narratives. Clearly, the steam has completely come out of the Solana meme coin supercycle narrative for quite some time now, and even much longer period of time for Dimension and Celestia airdrops on Cosmos hubs that deflated heading into summer prior to the start of the inflation of the meme coin supercycle narrative. So the reconciliation is that it was just relatively isolated rotations of capital in the backdrop of capital inflow. So what does it prove? It proves that this space, this crypto space, is so small and so not undercapitalized, because that implies it should be more capitalized, but that maybe is the case. But it has such low capitalization that even a moderate amount of capital inflows has the potential to result in enormous price swings. I think that's probably the biggest takeaway because much of 2024 was still not a full mean regression of currency supply. You could go over to DeFi Llama. So 2024, we were still well below or notably below previous all-time highs in 2022. Let's just say the end of 2022 is about 186 billion, and we didn't get to 186 billion until literally Q4. Isn't that coincidental? Uh, there's no such thing as coincidence. What am I saying? November 21st, 2024, we broke previous all-time high. What happened in Q4 of 2024? We started to see the mean regression in the broader crypto fintech space. It literally started in November. So all of that Cosmos Hub stuff and Solana activity. So maybe Solana activity. No, I would say Solana activity, yeah, occurred within this run up April of 2000. No, this was still before prime time Solana super cycle season. So as a look at that. Interestingly enough, look at the slope. All of that insane activity in Solana was just a moderate increase in total dollars available. And then everything blew up starting in November. Look at that delta. Look at that change in slope. Change in slope, ladies and gentlemen, is such an extraordinary takeaway with regard to a chart. If we see this when we're inspecting like currency supply expansion on Fred charts, the average rate of increasing currency supply from like an M2 standpoint or what have you, or Fed balance sheet or whatever. Rate of change is everything. So this is your signal through the noise of where we are. That is such an extraordinary change in slope compare go you literally have to go back to October of 2021, see that kind of slope, which brings us to 2025 and all this time we spent, well, not necessarily us, but so much of social media saying the top is in, the recession is coming. And that is not the frame of mind that I like to have. I don't, I, what is recession? In everything in language requires a definition. And this is definitely a manifestation of me spending as much time as I do in legal documents. So, okay, a recession is coming. Like a short-sighted novice in economics will be like, "Oh, stock market gonna crash," and then someone like me comes along and says, "What's the definition of a recession? What's the definition of a crash?" And we have all of this explanation we've done over the years on how markets are coupled in many regards, loosely coupled in other regards, and our performance is relative. For instance, let's take a vacuum. This is an example of a vacuum situation, just an encapsulated idea, and play it out in your mind. How would the general public respond to it? What happens if there was no capital inflow cross border? Let's just say whatever money's in the stock market's in the stock market, and the economy completely freezes. There's just nothing's going on. Let's just say that you're looking at the stock market for what it is right now, a snapshot, and you have your S&P, you have your Nasdaq, which are two ETFs. If the S&P and Nasdaq collapse 30%, and that capital went into the Wilshire 5000 or the Russell 2000, monetizing, mining, minerals, refining, manufacturing, goods and services. From a novice's perspective, they'd be looking at QQQ and SPY, say, oh, the stock market's crashing. But we just prefaced this thought experiment with this is a frozen period in time, meaning there's no capital in, capital out. What you're just having is a massive rotation of capital between NASDAQ, QQQ, and SPY to 5,000 other stocks across the economy. Yet the stock market's crashing. So what is a crash? What does that even mean? So hopefully this thought experiment explains or at least says, oh shit, there's more to it. So now all of a sudden you have all these trillions of dollars pouring out of the overpriced pig shit in NASDAQ and the S&P, and it's being spread around to the under monetized remainder of the stock market. So the stock market is still retaining all this capital in this thought experiment. So clearly the stock market isn't crashing because there's no capital outflow in this thought experiment, but the perception that QQQ and SPY are going down 20, 30%, let's say to the 200 SMA, you got fat mean regression on the weekly, on just that would be very emotional. Folks, it's not crashing. What you have is a redistribution of capital from underperformance to outperformance. If Nasdaq stops going up, and all the shit in the rest of the Wilshire 5000 starts going up, okay, there's plenty of bullishness in the market. I guess the takeaway that I'm trying to express is that what you hear on social media is almost always narrow. myopic, short-sighted, novice. It's not a robust, well thought out, mature idea. Literally, you could be critical of someone saying crash. You could be critical of someone saying recession. There's so much more to such a statement. And that thought experiment I just gave you not only applies to what I just described as an example, you literally apply it to nation states, sectors of economies, continents, a grouping of nation states, international relationships, cross transatlantic relationships. So the scope gets bigger, or can be bigger and bigger and bigger. And what that does is factors in, or you have to factor in more components to the calculation to understand what the hell is going on. Crash isn't a crash, it's a redistribution of capital, a reallocation of capital from underperformance to outperformance. And that, my friends, is exactly why I stare at the DXY when you have so many folks on social media staring at the Bitcoin price. Folks got to understand, especially folks that listen to me. I This is the U.S. dollar index, DXY. It's not the dollar; it's a basket of currencies, but it's a general expression of the dollar relatively. Dot dot dot. Ellipse. Relatively, it is relatively expressive of the state of the dollar to a degree. Enough that you get a high level, inspection of what the hell is going on. So the point is, I'm staring at this chart. Looking at this chart, I see Bitcoin. Looking at this chart, I see Nasdaq, the S&P. Looking at this chart, I see gold. Not the fact that I actually have gold down the bottom. I have the other ETFs as well up at the top. But this chart tells me the story of what's going on in Nasdaq and the S&P and gold and Bitcoin and all the cryptos that you and I have chosen to invest in. This single chart tells the whole damn story. So what do I see? Like if I see this chart go down, I'm like, all right, great, we're going to have a decent day. If this chart is horizontal or finding a little bit of pressure upwards, and then, oh, lo and behold, move has a click down to 96. I'm like, why is the market relatively green? Why is curve up 5% on the day? All right, look, move tick down. So that's why move is a point of confluence in understanding the mechanics of the system and what puts pressures, upward or downward pressures in pricing in various markets. 10-year got to bump up to 0.54% on the day. What you want to see is all three of these red. When you see all three of these red, three of what? When you see all three of these red, oh, you don't see my cursor. When you see the DXY move and 10-year yields red, that's when you have your most bullish conditions. So, bull market. It's such a loaded term, bear market, loaded terminologies, because markets are component or have components or have endless components. So markets are a composition of endless individual components. So do not fall into that trap. Now, what does that mean? The trap of thinking binary, which I'm about to contradict. A bull market or a bear market. Meanwhile, literally, that's everything I do. I'm a reductionist, so everything is either A or B, up or down, left or right, binary. But I wouldn't do that with markets because there's so many gradations, so many colors in the spectrum of a market that you can't fall into that binary reality. The market is either on or off, bullish or bearish. There's so much. texture to a market that it warrants a significant amount of due diligence to understand what the hell is going on. You need the backstory, guys. You need the dinner table investing. You gotta be able to talk like this when you're talking to people about what the hell is going on in the markets. Anywho, curve with a nice bump to 47. That's comforting. Gold signal through the noise, $3,031. Gold. Goodness, that is an extraordinary number. Talk about signal through the noise. There's nothing else to take away. I mean, look at oil down at 67. Oh my. Um, recession, economic recession. Eco- Were we not maybe in a recession all this time since post 22? Maybe is currency supply expansion or contraction an interesting way to get a sense of economic activity? Currency creation slash destruction. It's still that's also not black and white what a recession is. Obviously, that's why the folks are so hesitant to define a period of time as a recession, because clearly employment has a component in there. And then you have all the distortions with the federal government picking up 25% of human beings working in this country. So that's clearly a distortion with regard to private sector economic activity, right? So it's not so simple as people talk. Albeit then on the other hand, I look at the DXY and I'm like, oh, it is pretty simple. I just want the relative dollar valuation and I understand the mechanics of what it means when the dollar goes down in value. What forces that applies to the macroeconomic system. So this big red circle here has been a bear market since 2020 and mid 2021, and that is something I stand by. We will not see exuberant slash bullish conditions across the entirety of the market until we finally breach the 200 SMA in the weekly. And these are all relatively inaccurate levels, I state. What that basically means is you want a downward trajectory, a good push through the 200 SMA, confluence suggesting continued number go down, and you need the confluence of move rolling over also and 10-year yields coming down. And most not ironic, but it is what it is. This is literally the stated administration policy of the current sitting federal United States government. Dollar down, interest rates down. They say that's exactly what they want to do. And I describe to you literally what happens when those conditions actually start to occur. And we state that based on what we just experienced in 2020 and 2021 and 2016 and 2017. That's what these lines are. If anything could be titled or labeled a bull market or a bear market. This line down was a bull market. This line down was a bull market. This line down was the second leg of the bull market. You remember the double top in Bitcoin in 2021? If you want, this, I'm not going to draw it, but this line up, that is a bear market. This circle is shit conditions with everything basically figuring out what the hell is going on until the market makes a decision and escapes this massive region between, let's say 102 and whatever the hell the top was, 114. This is just a massive region. You know why? It's ultimately, you see the congestion. That's why you got to zoom out on how it doesn't mean much. Look at that big red circle and what it turns into. Look how it compares. Becomes a blip. All these years of your life, you spent 3 years since 22, 5 years since 2020, 8 years since 2017. And there's literally candles on a chart. So it's this high time frame perspective that really gives you that big picture of what the hell is going on. Love this chart. 6 months on the DXY. One candle is 6 months of your life. But look at these circles. Lower highs, clearly lower highs. One, two, that damn green line at 107.35, an extraordinary line. But it just so happens this red line at 103.75, 103.81, very interesting. So you look for points of confluence. Check it out. What's the green line? The green line is more or less the top back in 1976, and it was literally Pico top in 2023. Yeah, a- 2H 2023, second half of 2023. So if you have that confluence and the fact, my interpretation, my inspection, that this stuff was a failed breakout above that line, that's a significant line, a significant level. Same thing is the case for the red line. Pico top in 2017, been validated as well from our .com crash time frame, invalidated as well from our 1980 or the crash of 87. The hyperbole is extraordinary, but this dollar exuberance in 1987 was also invalidated below that red line. And it turns out it's a decent level going back to 1977, as well as look at that wick in 1974 closed below that level. So there's some interesting points of confluence suggesting that these are two of the most interesting levels in this whole darn chart, especially given our current positioning. And here we go. That leads us to one of the few posts I did on social media today, the 4 hour. I'm such a psychopath. We go from 6 month charts to 4 hours. And look at that red line. Here's your two lines. Here's your 103.81 and your 107.35. We're clearly below the 107.35, which is certainly comforting. It should be comforting. But we are in a zone of congestion that needs some puffs plus. Figure out what the hell it's going to do with the 103.81. So that is a heck of a line that we just inspected from a 6 month chart standpoint. And look at that. Is it lower highs? No. From a no, not even from a closed perspective. Whatever, that's a subtle technicality. It's a double top, if anything. Boop, boop. And it's a decent level from a top standpoint. But let's see what happens over the next. I'm curious what happens over the next week, days, 2 days, 8 hours. So we closed last week's candle below that line. So the market is fighting, and the dollar is designed to go up. Whatever, that's a long story. So if the dollar is designed to go up, it makes sense that we're having wicks and the system is fighting the powers that be and the policy they want the system to accept, at least in the short term, near immediate future. So 2 days, 8 hours, you want to close below that line. Preferably, you want to close below the close of last week. You want to close below 103.73. Close anything below that, and that just increases your confluence. And I think we've had the retest to a degree. I mean, maybe over the next month, you could easily see a retest back to 103.81, and that would be a breakdown retest. And then you look for the lower low, 103. And that is the trifecta of bearish confluence. You don't need the trifecta of bearish confluence to be ultimately comfortable in understanding the directionality of markets because clearly this is a bearish, which is distinct from a bear market, bearish implying there's a pressure from above. There's a pressure pushing this chart down. And clearly that's a manifestation of administration policy because that is not the nature of the dollar as it is consumed and used worldwide. Up is that natural direction. Down is pretty much an artificial direction that only lasts so long. Go back into the 4 hour real quick. Clearly, from a 4 hour standpoint, the same level holds. You want to see over the next 2 days, 8 hours, which is a fair bit more candles from here, fair amount of more candles from here. You want to see it hold this line. You can breach through from a 4 hour perspective. What does that even mean? That'll look like a wick on a daily or a weekly. So what you want is that weekly close below. So you come up here, 1039, but you finally close below, let's say, a little bit more confluence, a 4 hour 50 SMA. Maybe the 4 hour 10 SMA, because it was really hugging this 4 hour 10 SMA for quite some time. Look at that. That's the dark green line. Hugging, 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 breach to the upside, horizontal congestion, lower low from a moving average standpoint. Something I like to do is this, hide. I don't want to hide. Yeah, that's fine. The drawings. So look at the MAs. 4 hour, all downward sloping daily, starting to downward slope. There we go. That'll be interesting. Albeit we did have some downward sloping 200s and 100s on the daily. So that is not too early to really draw a conclusion unless you start to print a lower low. But that's going to take, from a daily perspective, that'll take weeks, sometime into the second half of this year to start to see like a 100 SMA or a 200 SMA start to produce lower lows from an MA standpoint. Go to the weekly and it is all up and to the right. That's going to take some significant time. Coincidentally, from a weekly standpoint, without the price chart, you see that the 100 SMA pretty much mirrors your double uh, bull market, dare I use that term, conditions in 16, 17, 20, 21. So that's roughly the time period in which, or at least this chart depicts roughly the time period in which we had very bullish conditions in crypto markets. Put the price action back on. Let's take a look at one further chart and then we'll do some commentary. If you're on X or on YouTube, please feel welcome to ask any questions. I'm more than happy to answer anything that's on your minds today. On the weekly chart, this is we're we're through the guppies, so that is at least a first step toward red guppies, which is what I very define as bullish market conditions. You see red on this chart, and things are getting weird. This is the 200 exponential moving average, and it obviously held as support. This is a weekly standpoint, so this is a mean regression here, mean regression 2, 3, and let's see what happens. Interestingly enough, in technicals, things come in threes, ABC patterns. So this is the fourth time, and we're quite likely to interact with at least the 200 SMA based on this trajectory. You know, Trends continue until capitulation, and then an event happens and it stops and reverses. So without an event, your base case is always the trend is going to continue in a particular direction. So let's see it continue down. Let's see it punch this 200 EMA. Let's see it punch a lower low from a weekly standpoint. That literally puts us below 100. You're going to start to see gray guppies, and maybe in a month or two, you start to see red guppies. And that, my friends, is past the point where the market is getting weird. I'm pointing against weird. Is that even debatable? Some point against weird. Teddy, good morning, Cap. Much pleasure. Arrow, morning. Sergio, present. Yee, good morning. Dean, Anthony, Athletic Concept, Staff, Peter. Throw some questions and comments. Ladies and gentlemen, in the back of the class, more than happy to talk about anything. Otherwise, I think we're all spent on technicals. Bitcoin at 84.8. What's the point of even looking at the Bitcoin chart? I have absolutely no need to look at the Bitcoin chart. So I see all that information that I need to see from a dollar perspective, and I get to look at less charts. It's just much simpler that way. Let's take a look at others three, total three. 3.7% on the day. So look at that correlation, or rather that inverse correlation. 3.1% down on the move indicator, and you got a nice bump up in total three. That is a very nice bump up. Let's turn our lines back on. There's our previous all-time high. And look at that. Look at that. Look at the structure here. This is a weekly total three. Look at that wick right into the bottom of the guppies. That's a beauty right there. That is a beauty. This market looks lovely. People running around with the most insane ideas. That down is bad. Down tells just as much of a story as up. And that is a beautiful difference as compared to what we saw in 2024. These are big wicks through the guppies. But note, in 2024, you still held the bottom of the guppies and the candle body closes. Oh my. So if you combine the two, this region right here with these three weekly wicks below the guppies, and then this one that didn't even wick below the guppies is literally stopped out right at the guppies. Ooh, 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 these charts look oh so good. Hey, look at Frax, 13.9% of the day. What a remarkable piece of tech. Look at that. Not bad at all. Not bad at all. Clearly not something that makes many people happy, but that's not the data that I look at in charts. I want to see not down. Not down is lovely because at some point everything goes up. Eunice in the house, much a pleasure. Such soothing and sexy analysis. Thank you very much. I appreciate that. Man. Are the markets risk off? Risk off, risk on. Bull market, bear market. Don't drive yourself nuts, and don't do that binary, that tendency humans have to put things into a binary framework, on, off, left, right, up, down, without at least rigorous framework to define. I don't know, because clearly that's a contradiction. I'm literally telling you guys bull market, bear market are bad, but when you zoom out on like a weekly or a monthly chart, you clearly see when you had bullish or bearish market conditions. Now, how do you reconcile that? Don't don't be binary, but you know what it is? Don't be binary with complicated things that warrant color. Be binary things that warrant binary, like inverse correlation. So the dollar goes down, everything goes up. Well, that's pretty binary reality based on confluence and precedents, things that have happened in the past. So I guess scope, use of a binary reduction methodology is really dependent on is it appropriate and who defines whether it's appropriate. All this stuff is subjective conversation. Only us as individuals could define if it's appropriate or not to use a binary reduction. I guess that's the best highly sophisticated explanation I could have for the thought that I'm thinking. Um, let's take a look at some analytics. No question. So might as well look at something. Uh, here, Captain's takeaway. Look at all this noise, yields and fees and EVL. Meanwhile, we're going to go over to stablecoins to peer through the noise. As we discussed earlier, $229 billion across the crypto space, up and to the right mode is clearly present. That is extraordinary. And we know for a fact that Ethereum is the primary destination of capital in the entire crypto space. It's where the vast majority of capital is. In fact, if you do this, what is it, 229? Yeah, Ethereum has more dollars than the rest of the entire crypto space combined. What does that mean? Not only is it quote unquote gorilla in the room, it's just the destination for capital. What's the takeaway? Extraordinary financial activity will occur primarily on the Ethereum network. And that financial activity will bleed over to the smaller networks. Some of the biggest gains won't necessarily be on Ethereum. The most interesting large perspective technology will probably be on Ethereum, quote unquote, probably. But man, you get a couple $1 billion that flows over to one of the L2s or whatever, that's going to cause insane price appreciation and a tremendous amount of volatility. Where's Solana at? 4.4% on the week, leveled off. Very interesting because you had the pop to 12.5, 12.67, a nice dip, but things have leveled off. 12.31, that's good to see. Solana still retains the entire narrative that I've always said about it. Nothing changes. If anything, I'm extraordinarily consistent. Let's flip through it real quick. Look at this marginally positive sum across the board. Base, Arbitrum with a 10% bump. Avalanche, marginally negative sum. Where is Optimism? 1.6%. Sonic? Of everything I owned, of all the chains, Sonic is the most interesting right now. For the same reason, maybe the Phantom was as interesting as it was back in 2021. The stablecoin supply in this chain is upper and more to the righter than everything else, especially considering prevailing market conditions. $263 million, massive double digit week over week changes in dollar supply. This is how much simpler can you get from an interesting standpoint? This is interesting. The only thing more interesting is that it was this exposure to Sonic. The most interesting exposure to Sonic was a manifestation of ownership of a protocol on Arbitrum. That's it. Keep it simple. You don't know how what you own is going to affect the way your portfolio is constructed in the future. But we talked about the implications of Kingdom and its methodology for expansion. We've talked about the implications for optimistic superchain and Velodrome and its capacity for expansion. I mean, we've talked about a lot of ways to acquire free exposure to the things that you want exposure to. For instance, a network, um, a new network. Look where Kingdom expanded to. Expanded to Linnea, Mantle, Sonic. And I believe there's one in the cards that's probably on hold for the time being. My bet is they're putting a lot of emphasis on the Sonic deploy. We've actually seen significant updates over the last couple of weeks. Um, the only reasonable takeaway is that uh, Shadow is the greatest performer of the entire kingdom. And technically, I don't think it was even folded into the kingdom from a brand perspective. Um, but it's outperforming everything else by leaps and bounds. And that's obviously because it's in an increasing currency supply situation. Arbitrum is still just recovering from a significant decrease in currency supply resulting from the hyperliquid deploy when they launched their chain. All that capital just flowed over. But watch what happens as hyperliquid's exuberance fades. You'll get your capital rotation back to a place of increasing comfort. Aptos more stable than optimism. Stable at 846 mil is decent. How's Barachain doing? A bill. Well, stable is check the definition of words. Stable is distinct from capitalized. So yes, that is a true statement. Aptos and Barachain are both increasingly capitalized as compared to Optimism. 2.2 bill. Polygon is more capitalized than Optimism. Avalanche, certainly. Optimism is one of the lowest capitalized chains in the crypto space, which is interesting. Albeit base literally is an optimistic super chain. So because of the nature of optimism, there's interesting considerations because this is literally optimism. Base literally is optimism. So as you get that seamless interop that the Optimism Foundation is talking about, we can see the narrative change, and that really is what justified and warrants reasonably my exposure to the optimistic super chain vis-a-vis Belgium that we've discussed for all these months thus far, which took an absolute beating. But what we do, it is productive on the way down and will be productive on the way up. 4 bill on base, marginally positive, some good to see. Let's see what Ton's doing. Just a random $1 billion on these chains. Where you going back 2030? I just the historic story that people tell on social media. They give you your nostalgic top 10 by market capitalization, and then they'll pull up like I don't even remember the old top 10 list. Whatever. That's not the point. The point is the top 10 looked very different in 2020 from 2019 leading into 2020 or 2015 leading into 2016. The top 10. I expect the numbers with regard to dollar supply in a top 10 format to be very, very different in the coming years. And that's not like even a remotely exuberant statement. That's what happens. Things get weird. Things are going to monetize. These markets are going to get capitalized because that's the way economics works. Simple as that. Any other takeaways? You can look at volumes real quick. Mainnet fluid topping curve for volume. Fluids on the map, whether from an investment standpoint, if you had it at a good price, that is very reasonable exposure. Look at the top list, and bear in mind, this is exactly what I'm talking about. The top list, Balancer was higher, Pendle came on the map, and now Fluid. It used to be Uniswap and Curve for a fair amount of time, but now Fluid and Balancer are certainly present. From a mainnet perspective, isn't that fascinating? Pancake swap. You could go down the list, whatever. Uniswap, Fluid, Curve, Pendle, Balancer. That's what tickles my fancy, at least. I don't know what the hell's going on in Solana. Look at that. Arbitrum, Camelot. Look at that. Huh. Not just the 71%. Huh. What's the takeaway there? What's with the volume activity? I know right now Aero's like, oh, hello. What does that even mean? Is that AWA? What's with the financial activity? Is that credit? DeFi money is not hooked into CRBUSD's contracts. It's its own distinct set of contracts. Maybe it's CRBUSD, and clearly that uh, requires the DEX contract infrastructure. That's meaningful. Literally, folks are easy to not see the connection between the credit facility they offer and the potential impact that can be had on the foreign exchange infrastructure. It all goes, everything goes through foreign exchange. Everything that goes through the dexes, and all roads lead through Curve. Just is what it is. Waiting for an investable product to hit Solana. Until then, I LP. Yeah, I don't even LP. I would LP stablecoins, but you need a very large amount of stablecoins to justify that kind of position. And I not doing an LP unless I don't have to babysit it. So I'm not too fond of the concentrated LPs. Um, and I'm not too fine with the risk reward of, albeit Beefy always comes to mind. Beefy has proven itself resilient over these years. And they are just there and they are humming along and it's Beefy, Beefy Finance. It's become one of those brand names. Well, mother approved brand names, haven't they? So, but I don't have that optionality, so I don't even consider it. Certainly not going to provide liquidity for volatile assets. That's just not in the captain's cards. I'm here. Let's go, pal. Speaking and crush Bitcoin to 70s, and then we could pump to 100K again. Ah, looking at the Bitcoin chart will drive you nuts. Let's see where we are from a guppy standpoint. Not even a remotely decent mean regression from a weekly standpoint. I mean, at least let's get to like 72, bottom of the guppies. You go over into the MAs. Yeah, look at that, right into the 50 SMA. So from a moving average standpoint on the weekly, this looks like a solid mean regression. Otherwise, you get a fat dip to the 50s. Monthly perspective is not entirely relevant. You get a fat dip to 46. 46 would be a remarkable dip. You know what $46,000 was? That was the ETF launch. Okay, so that's a mean regression. Rollback price to ETF launch, and that's what mean regressions are. Oh, anywho, assume protocols on ETH will be higher up on the top 10 than most base layer networks. Yeah, that's the way it should be. That's what fat protocol thesis is what people call it. I expect these businesses, these fintech businesses, to be larger than the networks they're on. Well, what does that mean from a security standpoint? I don't know. You probably have an equilibrium, probably have a critical mass of how much capitalization effectuates security on a respective network. That's like, all right, yeah, fine. A protocol on Ethereum is worth a trillion, and Ethereum's worth 800 billion, 900 billion. So you did get that flip, but that is more than enough capital to ensure security from from a network level perspective. That's something that I tend to think is reasonable. Protocols being worth more than the market cap of a gas token, because then you get to start to reframe the significance of Ethereum market cap. I mean, I don't even. What's most pertinent is you could buy Ethereum, and it is used as gas for transaction fees to engage in financial activity. So if anything, the market wants it to be cheaper, not more expensive. Otherwise, it's expensive to engage in financial activity. Anyway, that's an obvious takeaway, but folks are like, "What are you the captain of, Captain Obvious?" Yo, Tam's in the house. Much a pleasure. Good evening, Cap. Um, Not much else from a crypto perspective. VIX popping down, still relatively elevated compared to where it's been for the last 2 years. Pretty compressed region. Nothing too much to write home about. I prefer looking at the move indicator, in which case seeing 0.44% on the day for the 10-year is comforting. I don't expect significant pop and move based on this kind of 10-year volatility. If anything, things look like we're finally in a downward trajectory. I mean, look at the angle and notice this the monthly chart. Fine, we'll give you a weekly chart. They still have that downward trajectory with a little bit more noise and activity. But that is trending down. So, what do we title the stream? We title the stream, "You made it this far." So, for crying out loud, ladies and gentlemen, you made it this far. You made it this far because this is that what folks would be like, "Oh, it's a bull market, a bear market." If this goes down, that's when things get weird. You want to see this breach the green line. Go through green line, market get weird. Tell that to folks. Green line, market weird. We could talk like cavemen at sometimes because that's really what we still are. And then from a DXY perspective, it's the exact same thing. Breach red line, market get weird. Breach 200 SMA. Crypto good. Crypto's good whether it's above or below the damn red line because we see the trajectory and we see what the market has been doing, and the market looks lovely. Yep, that's why I don't hold Ether. I rather own the businesses. I have a rigid definition of what is cash versus what is an investment. That's my definition. You got very reasonable folks that have different definitions everywhere. Folks talk about it on Discord, and it's everyone's individual responsibility to define the shit for themselves because ultimately you're defining it for yourself to find comfort. Because the only way you're going to engage in markets and actually remain in markets and survive markets is if you're comfortable, cool, calm, collected. So you got to write these things down, define your business. So for me, I don't define Ethereum as an investment. Technically, I don't even define Bitcoin as an investment. I define it as cash. Happens to be a volatile price cash, but so is foreign currency. Pounds, yen, yuan, all changing and trading in different values over time. And Bitcoin is increasingly volatile, but I define it as cash as a component of the cash position of the portfolio. Investment's a very simple definition. Fuck you, pay me. And if it's not paying, it's not an investment. That is how I define it. I could see folks easily defining Ethereum and Bitcoin and what have you as investments, but that's everyone's individual right to do so. Ethics is gas. That's all I use it for. I don't I don't need to diversify between Bitcoin and Ethereum, and maybe Ethereum outperforms Bitcoin, but that's not the point. The point is I need cash. Cash is spendable capital or collateralizable capital. Spendable capital, great. Best one there is stablecoins, but that's not collateralizable. So that doesn't give you a component of your cash position that exposes you to the volatility of favorable slash bullish market conditions. Okay, so that's where Bitcoin fits in as both a cash-like instrument, but also is collateralizable, so you can leverage as as long as things remain reasonable. Any new projects you're paying attention to? Well, there's nothing new that is remotely interesting. The most interesting things are old because what's old isn't old. Yeah, any new projects that you're paying attention to, it's all brand new. All of this shit just launched post 2020. And to top it all off, this is a market, an international market that nobody saw coming. And nobody had any idea what the hell it is, how it works. That is the biggest takeaway. So that's how I respond contrarian to a very decent statement. What is a new project? All of it is new. Curve Finance is brand spanking new. Brand new, fresh out the box, brand new. You want to know why it's brand new? Let's take a look at the 6-month chart. This is why it's brand new. Here's your 6-month chart of Curve Finance. And now here's your 6-month chart of Bitcoin. Bitcoin's brand new. And here's your 6-month chart of NASDAQ. Here's your 6-month chart of S&P futures. But if you do SPX, here's your 6-month chart of the S&P 500. Goes back to 1871. Okay, ladies and gentlemen, we found not brand new. This is not brand new, whereas S&P futures is brand new. It's all brand new. That's the biggest takeaway. Hope that helps. If we know we are moving into a secular dollar weak environment that will last maybe a decade or more, that means risk on conditions for that time. Not sure if any of us are ready. I know I'm not. Yeah. Uh, That's what I spent the last years doing to be ready. I own what I own and I chose what I own, and I'm correct in owning what I own according to my rules. I'm done. I don't need to buy anything. I don't need to trade anything. All I need to do is continue to execute proper business oversight as I define it. This is exactly why over the last year or so I've been trying to tell you guys about business structures and stuff. That is the most important way to be ready. You know, what happens if you make 100 grand? What happens? I'm talking literally from like a capital gain standpoint. If you're not thinking entirely along the lines of crypto fintech as businesses, nobody answers that question because they don't think about it until it's too late. Until the 100 grand has a tax bill of $35,000 and the market's crashing and it's not even worth $35,000 anymore. You might as well prepare. Prepare now. And that's what we've been talking about over the last years. What kind of business structure? What kind of accounting? What are your rules from a federal and state government standpoint? That's exactly why that has been a common talking point for the last at least year, especially, but definitely the last 3 years, give or take. Just as important as compared to what to own. What are the implications of what you own? How much taxes involved? How are you going to manage the accounting such that you actually know how much you're making? Where's the records, the record keeping? So that's a very meaningful and imperative um, level up that almost everyone needs to do. And I'm not even done. It's not something that you're done with. It's something that you continuously do over time. But I did post this morning my document, my memorandum. This little beauty. This is the most objective thing I've done in quite some time. About 17 pages, give or take. It's a statutory analysis of subchapter B and subchapter J of IRC code. Anyway, I posted it this morning for you guys. I think it got 4 likes. Rather than getting lost in politics or the insanity of economics, I prefer to apply myself to something increasingly objective. Aside from science, which is truly universal, the law is something that is of comparable universality on a per society basis, a base point of reference, a common reality that we all share. Maybe whether you want to share it or not, but you kind of live by it. In this regard, the law is not just powerful, it's meaningful. Understanding the law and sharing that understanding is a way to give something useful to everyone that is applicable and relatable. Be humble, be grateful, be considerate, and always endeavor to give something back to your society. While the memorandum focuses on subchapter J, there's meaningful insight and argument about subchapter B, applicable to a personal setting. And I pinged Clinton Donnelly. Do you even know the tax rules? You know how much taxes are due if you make money? Or is it just out of sight, out of mind? I would read that. That's why I wrote this. I wrote it for me, but I share it with you guys. It's right here, right here. Here's the link. Yeah, I even put the link. I have a short link. Uh, no, that's a tab. I have a short link. Where is it? Docs. I have it up. Oh, that's that. That's that. Here, I have a short link. Here, here's your short link. Bitly. Okay. I know it. Throw it in AI. And you got to start down the rabbit hole at some point. Yeah, the rabbit hole has to start at some point. And it's clearly related to not there's three types of law. There's personal, corporate, and trust law. So this is obviously in the context of a trust. What the hell is a trust? AI. AI that shit. What is it? How do you make it? How do you manage it? Why have it versus other things? And I can answer that one. There's three types of rules: personal, corporate, trust. So which rules do you want to live by? It's your choice. The rules are there. So you have to understand the rules to be able to make a choice. Like, all right, that's cool. Corporate. I want, and there's plenty of types of corporations. Which one is more interesting? Which one has a better structure? Which one allows you to do different things? Or then there's trust laws, subchapter J. Hey, what are the rules? It just so happens there's the rules. This is literally the rules of subchapter J, especially with regard to what we discussed, crypto fintech. And this is literally, you might have heard of this case, very popular case. Where was it? Where did I put that case? Down here? Well, quote. Yeah, no, it's down. Did I put it up here? I literally have to find it. Sorry. Yeah, the Jarrett. No. What the hell? Yeah, here it is. You guys heard about this case, that Jarrett case. So it's about staking, Tezos staking, and he got a refund. So he was staking Tezos, he got Tezos, and he paid taxes on it. And then he basically filed a refund saying, I shouldn't have paid taxes on that staking that gave me more Tezos, and the IRS gave him a refund. So, all right, so the IRS gave him a refund, which means they closed the case because they just refunded him his money. So, isn't that a bit contradictory? And this is from a personal taxation standpoint that case happened. They gave him his money back, which is a complete contradiction to their IRS memorandums. I don't remember which one, but it's one of them. Um, so The and this is exactly what Clinton Donnelly was talking about. It's like, understand the rules, and he was literally talking about Jarrett the other day, and he's like, use Form 8275 and just state, all right, I got this amount of receipts, and follow. It's not for me to recommend tax reporting methodology, but that's exactly what Clinton Donnelly clearly is receptive of. I was actually quite impressed with some of his positions and how he's been talking about things from a tax accounting standpoint. Um, there's a difference between being aggressive and being respectfully crafty. And that's really the nuance of law is that the law doesn't have an opinion. It just is what it is. So the interpretation of the law says what is the best course of action. So there's plenty of different interpretations. And that's exactly why Jared Case was refunded. Did and that's more or less my arguments here. Um, without defending their position in court, could be interpreted as a tacit admission that their stance on taxing staking rewards at receipt is not unassailable. So it's not unattackable. So they didn't have a strong case. And or it was only a $4,000 tax refund. So maybe that was just simply a cost benefit analysis, which I could probably put a bullet here and talk about. So the IRS is like, this guy's asking for $4,000 back. It's going to cost us 50 grand and 3 months to really get through this court case. I'll just give him his money back. So that presents another interesting question. So, but now, um, if that's the case, that offers encouragement to use Form 8275 to say, yeah, I was staking something, I got tokens, and this is the amount that I received, and you put that on Form 8275, that doesn't go on like, your 1040 as income because I'm just reporting it on 8275 because I didn't realize it. And that's really my breakdown here, and it's two particular cases: Eisner versus Macomber, 1920, and the classic Glenshaw Glass of 1955. And I do a brief analysis. And really, I my argument is, and there's more to my story than just staking because I don't stake at all. Um, but I would say that Eisner v. Macomber is controlling with regard to, frankly, staking and what I argue cash flow, because cash from what we do is in property form. So therefore, this is the controlling case. So it's an argument. That's the beauty of law and the 8275 form. This is my position. I see this as the case. I am clearly arguing it in 17 pages of text. And all of this 17 pages of shit really kind of reduces to, um, yeah, Eisner v. Macomber is what controls the taxability of property receipts of an entity distribution. But it takes a lot of text to set up that argument. And that's kind of what all this stuff is. It sets up the argument, it breaks down the history and all of the statute word by word. Yeah, it's part of it. It's the key in many regards. In fact, do I end my conclusion with Eisner v. Macomber? Yeah. Yeah, that is pretty interesting. Here, check this out. Let's go back to Jared real quick because maybe you find it interesting. So, quote unquote from Glenshaw Glass, and this is so used everywhere. We have instances of undeniable accessions to wealth. So, if you undeniably get more wealthy, clearly realized, and over which the taxpayer has complete dominion. That is such a classic quote. Complete dominion. I have control over it. I claimed my staking rewards. So, what is the key here? Tense. It's as simple as that. And that's the beauty of semantics and really just digging in and hitting things hard. Past tense. Realized. So, for something to be realized, it must first experience a realization event. So, Jared case, does the receipt of property constitute a realization event? Or is the receipt of property unrealized? So, now this brings up the question, what is realization? Now, guess what? Eisner v. Macomber is the concept of realization, which plays right into IRC 1001, which is capital gains. You have an asset, you have a property, and you sell it for a different price, and you realize a difference or realize money, the realization event. So the distinction, tense, literally something as simple as tense, forms the basis of a very interesting argument. Realized requires first having had a realization event. Interesting stuff. Yeah, right? Isn't that remarkable, Peter? Anywho, but it gets more complicated. Well, if you're talking about stuff like this, I don't know if it's from a trust or a personal setting, but it gets really interesting because look at all these precedents. Lovely stuff. 10th Amendment is so key. The state of Bosch is like just classic trust stuff. It's like because the state, so that's why it gets interesting with trust because it's not just federal law, it's the state law. As in, there's 50 states, all with different law. So the whole tone, and I've gone over this document so many times. There's so much interweaving of language that there's no override. I never use the word override or change of scope. I focus on words like harmonize, harmonize state law with federal law and how they work synergistically. So, for instance, I never use the word exclude. Never. Maybe I do, but not in like excluded from taxation or not taxable, because that's not what it is. It's different. It's the harmonization of state law and federal law that says whether something is income, quote unquote, gross income, quote unquote, taxable income, quote unquote, or ordinary income, quote unquote. Holy shit, there's four types of income? What the heck? And there's more. So literally the definition of words is a critical inspection or a critical thing for a document to do. How do you define it? Is that an overall accepted definition of the word? Is it consensus? Is it a reasonableness? Reasonableness is a critical component of law and documentation. Reason Isn't that remarkable? Just being reasonable. Is it a logical argument? Not necessarily rational, but is it a logical? So it's the sequence, like for instance, this beauty right here. It's a very simple argument or a counter argument rather. So the IRS might argue. I'm going to end the stream, but I'll go over one more thing. Um, oh, good for you, Peter. I created my own trust for crypto and other things. Contracts makes the so the trust instrument is a contract. The trust instrument is created by state law, and state law is an indirect manifestation of federal law because clearly the states are not just making laws in a vacuum, they're making laws in the context of federal law. So inherently, if you create your trust, and you're supposed to, based on state law, you are respecting federal law. So then, how your contract, the trust, is executed is based on the subtle, nuanced relationship between state law and federal law, which manifests um, results that are distinct as compared to an individual. So that's the best expression. So, like for instance, this argument. I'll go over this one argument because it's really a core argument. So IRC 61 basically says, here we could actually go to it. Except as otherwise provided in this subtitle, gross income means all income from whatever source derived. Isn't that a beauty? Whatever source. It doesn't matter. And there's a laundry list of examples, but that's irrelevant. Like it's basically broad, all encompassing, and it gives you, but not limited to the following items. And this is quote unquote from IRS statute. Whatever source derives. So like, how the hell are you going to craft an argument against that? Well, fortunately, there's the first sentence or the first part, except as otherwise provided in this subtitle. It's like, all right, great. So you build a statutory hierarchy, and this is exactly what 641B does, which is what I talk about here. 641B says the trust's taxable income is computed in the same manner in the case of an individual, which means IRC 61, except as otherwise provided in this part. Did I fuck up the quote? I don't fuck up quotes. IRC 641, 641B. Yeah, I did. Fucked up the quote. Computed in the same manner as in the case of an individual as otherwise provided in this part. Did fuck up the quote. Period. Fixed font. 11. Okay. Except as other. So here, IRC 61, except as otherwise provided in this subtitle. IRC 641, except as otherwise provided in this part. So and there's your one and two. So these counter arguments are like getting to the core of the matter. That's kind of what I do up here also. It's like, boom. This conclusion hinges on except as otherwise provided in this part. IRC 641, 1 through 4, use of unqualified income, not gross income, not taxable income, unqualified income. IRC 641B, except as otherwise provided in this part. And IRC 643B, which defines quote unquote income. No taxable, no gross. So income means something, gross income means something, taxable income means something, and ordinary income means something. They all mean different things. And then we'll briefly go back here. So IRC 641A deals with the application of tax. So if you go to 641, it's literally titled the application of tax. 641A, application of tax. So it's very important to respect the titles, and you're like, oh, that's interesting. And exclusively uses unqualified income and defined by IRC 643B. So it um, exclusively, is that the right word? Yeah, well, it does. It's exclusively because these four examples, all of them use unqualified income. You see the first word, but this is a non exhaustive list. So including is implies including but not limited to, but it's non-exhaustive. You can't just say it's these four things. It's basically it's unbound. Um, Subtle nuances that I go into in the document. But the point is, uh, there's a key point I made up here in 641. This was a key one. I just did this morning. Examples, not limitation. This is So every once in a while, I'm like, oh, I got to add this paragraph. And it's like, oh, it's so good. So the delineations of 1 through 4 are unconstrained examples. Unconstrained. Could have 20. That's just an example list. That's not contentious at all. It's their form that is an expression of congressional intent. The form, the structure, the choice of words. And that choice of words means something. It means something. And that's important. That's what is being digested and dissected word by word, and does not imply a limitation. Okay, and it does not imply a limitation to IRC 641A's inheritance of IRC 61, which basically means this: tax imposed by Section 1E. So it's an inheritance of gross income from IRC 61. So there's no contradiction with gross income means all income. This is from IRC 61. Retaining a completely unchanged meaning while also recognizing a need to reconcile the semantic choice of words in 1 through 4. All right, so what this is saying, all right, great. It inherits IRC 61. That's accepted. We understand that. But you chose to use the word income, chose that word. And that means something. You can't just use a word because you could have used all income. You could have used gross income. You could have used taxable income. You could have said all property, you could have said it's an unconstrained list, but you chose to exclusively use the word income in unqualified form. What's needed isn't a conclusion that IRC 61 is controlling. We conclude that IRC 61 is controlling. 641A inherits from IRC 61, but rather an evaluation of the effect that Congress inserted. They inserted an effect by choosing the word quote unquote income as compared to choosing another word. And by up here, the Russello principle and the principle of expressio unius est exclusio alterius, that choice is intentional and they know it. Income to factor state law into consideration. They knew what they were doing, and they know that IRC 643B defines the very same income they use right here. They know that. And that's because of federalism, the 10th Amendment of the Constitution, and what is it, Bosch? It's Bosch. Yeah, state of Bosch. And there's more precedents. Freuler and Helvering also deal with stuff like that. It, income is explicitly tied to state law, and this comes back to the 10th Amendment of the Constitution. That's why it's like court cases that just say state law unless there's something explicit in federal law that says no, 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 no. So you got to, in fact, they got to factor in state law. So they did it in such a subtle way that there's literally no conversation about this shit. If I look this stuff up online, there's no cases about the choice of words here. There's nothing like this document. I haven't seen anything other than maybe I'm the first person to see this shit and build a document like this. Anyway, let's finish that one argument. It's 12. Actually, I have time. You guys were short on the questions today. So I'll finish that here. Counter argument A. Yeah. Deals with application of tax. Title of IRC 641A exclusively uses unqualified income defined by IRC 643B. Very simple, right? This section relies on state law and the trust instrument to distinguish between the mutually exclusive categories of income and principal. So in state law, there's a concept called income and there's a concept called principal. What is income cannot be principal. What is principal cannot be called income. It's mutually exclusive. A distinction of significance as emphasized by the Russell principle. And that basically is what I introduce as analysis tools, which is the expressio unius est exclusio alterius. Um, anyway, if they and that comes down to like canons of statutory construct. If you choose a word, that means something. So that's a big one. That's a big one. Here, we can finish this. It's only five, it's a couple of bullets. I can finish this, can I? And then comes state law. For me, it's Florida. But it turns out this law is the same in all states. All 50 states have the exact same law. It's very simple law. Um, is an example of such a state law. So you see how I connect everything together? Um, this section relies on state law, and then the next bullet's like, this is an example of such state law. It mandates entity distributions of property to be allocated to principal, not income. It's a very simple clause. Here, here's quote unquote. Florida state law. Fiduciaries shall allocate property received in an entity distribution which is not money to principal. By definition, endless definition by the IRS. It's property. All crypto is property, even stablecoins. That's current status quo in the FAQs on their website. I've showed you guys that. By reason of mutual exclusion, what state law defines or allows a trust instrument to define as principal cannot simultaneously be income. Okay, that's just another way to say it. Courts must recognize the clear statutory hierarchy presented here. State law and federalism precedents such as the state of Bosch, support state primacy in trust law absent a controlling federal statute. That's basically the 10th Amendment of the Constitution. The Russell principle and canons of statutory construction substantiate the interpretation with all bookmarks, so everything links to everything. IRC 61 is so notice I don't say there's no don't say exclusion. Principle is and that's a key takeaway from this the framing of my document. You're not excluding principle from here. That doesn't work like that. To exclude something requires a statement saying you can exclude something. It's kind of like a deduction. There is no explicit law that says you can exclude principle from IRC 641A. So the point of this is to highlight effect. IRC 61 is affected by subchapter J. Subchapter J defines shit that affects how we process IRC 61, specifically due to the interplay between IRC 641A, 641B, 643B, and Part 1 statutes and state law. So I actually, is that a is that a reasonable conclusion? If it's affected, how is it affected? So that's the key word there to assess. IRC 61 taxes overseas. It's affected. Okay. So that implies how is it affected? So you don't come out right and say excludes. So that's kind of like maybe I link back to here to make the argument stronger. Go back to 61. I was writing about it earlier because it's not exclusion. Oh, here, it's up here. Did it in six. Yeah, this is it. Semantics. This is a good link. Maybe I. So the conclusion of that counterargument would be bolstered by this semantic argument. There is a distinction between exclusion and non-inclusion. Exclusion requires explicit authorization, but if it is inherently not included by manifestation of the relationship between all these statutes, that's very different. On practice, the outcome is equivalent. The statutory reality and fundamental mechanics are distinct, considering the interplay of federal law, state law, constitutional principles, and historic practice, which is basically the execution of trusts, since basically common law in Great Britain. Anyway, okay. Um, maybe let me put a bookmark here real quick. I got to use this. This is a good one. Got to remind myself to use that. Peter, created my own trust. You have to break. It's not even line by line. It's worse. It's word by word, and then it's not even word by word. It's the definition of words. It's the definition of words in the context of how the word is used, especially tense. Realized first requires realization. I just it gets crazy. So I love that. I absolutely love that because it's like it's a puzzle. It's semantics. It's a little poetic. Each word matters. Jurisprudence is a science. This is goddamn science, bro. Yay, coming in hot with the last question of the day. What's your opinion on Beats on Sonic? Over 200 million TBL seems trading with a huge discount right now. Old school. Beats is old school. Beethoven. Ooh, their branding is hot. I love their branding. It's got gorgeous branding. Um, yeah, but how does that factor into rule number one and rule number two? Are we in rule number two right now? At least I am. So I'm in rule number two, know when to stop buying assets. Rule number one is own more assets. So maybe you're not engaging rule number two and you're engaging rule number one because it's an undersized portfolio given market conditions and you're like, oh, I got to get in. And maybe you're just building your portfolio. So I could understand rule number two is not appropriate for everyone currently. All right. So how does Beats compare? I don't know. I don't know. I tend to think Andre's going to drop some serious shit. This new stuff that's going to have no token. At least that's what he said. So I'm curious what he comes up with because I know that that boy wants to do currency and foreign exchange. That was always his big thing, especially with fixed forex. I mean, that was the whole point of Solidly was to build an exchange for his forex products. So I wouldn't, I in my current mindset, I wouldn't buy any of these things. I wouldn't buy Shadow. I wouldn't buy Solidly. I wouldn't buy Beats. And what am I? I am grateful that I made the right choice with Ramses, which gave free exposure to Shadow. So I'm biased, so I can't necessarily give you an opinionated or a non-opinionated response like, all right, Beats is cool. Beats, I don't know. I wouldn't buy it, but that's me. What does that mean? I'm just giving you my interpretation of what I would do and why I've done what I do. So branding is hot. They got killer branding. Love that. What's a discount? What are yours as the expectations for the market? Uh, we got great conditions in the market right now. You go over to Sonic though. Uh, so here's an interesting. This is actually very useful. How does Sonic look? This is the volume, I believe we were looking at. Yeah, here's volume on Sonic. Beat coming in number six, minus 33%. So obviously this is a down week, minus 33% for the week. We all feel that in the volumes. Uh, Shadow clocking in at 40 mil for the week. Beats clocking in at 90% less volume, 4.23%. Shadow clocking in 50% of all volume on Sonic. Simple as that. What is in the lead tends to stay in the lead. The market leaders, disruptions are very rare, which is like Aerodrome disrupting Uniswap. Nobody expected that. It's a big speculation. Velodrome disrupting Uniswap on optimism. Big speculation. Turns out it actually occurred. You go over to what the hell is base? Base. Go to base. That's lovely to see. That's crazy. And OP mainnet 2 Velodrome tops Uniswap bigly. That is a market disruption. And what is in the lead tends to remain in the lead. That's an absolute fundamental fact of business. It's like Lyft never disrupted Uber. Apple never, ever, ever disrupted Microsoft. That might not be a widely understood or accepted statement, but that is the truth. Apple has never disrupted Microsoft with regard to business applications. Ever, 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 even though Apple is the biggest company in the world for a while. Never disrupted Microsoft. Anyway, ladies and gentlemen of the crypto space, I hope this was an interesting chat. I know that a lot of my shit is very philosophical, high level stuff, but the world isn't what you think it is. It's much more sophisticated, and there's a lot of moving parts, and it doesn't, there's comfort that comes in looking at the world simply. There's a bit of excitement that comes with understanding how the world works. Certainly is a great deal of intimidation trying to understand how the world works. So maybe I end the stream on the notion that's why AI is here. Absolutely extraordinary. Just use your AI and frankly Grok. Just straight up use Grok call today. Question, 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 and never stop. Wednesday, March 19th at 1:03 p.m. I appreciate all of you for joining me today. 235 people made it to the end of the stream, and you are all now a little bit more rational because of it. And that is something that always makes the captain happy. It's only Wednesday, so I will see you guys and gals later this week. Until then,